Hey, fellow spinoff investors and tender offer investors. This is Greg Miller from spinoffinvestingsimplified.com. Got another video today about a couple more tender offers. This one is about another warrant exchange, and then I'm doing an update for the Atlas Consulting tender offer for their warrants that finished up right before Thanksgiving. Check it out. Hey everyone, this is Greg Miller from Spinoff Investing Simplified. I'm your host here at Spinoff Investing Simplified's YouTube channel. And I appreciate you stopping by and taking a look around. If you appreciate this video or any of the others, please subscribe to our channel. We would love to have you along. We also appreciate your comments, and smashing that like button helps us out with the YouTube algorithm. We sure appreciate your time with us and hope you enjoy this video. Thanks a bunch. So, talking today about the Atlas Consulting warrant exchange that occurred just a couple weeks ago, and then the shift warrant offer. So, first, an update for the Atlas Technical Consultants. This one I had an update of about, I got in at an entry price of about $5.39 per share after the warrant exchange completed. So my pre-investment anticipated value was to basically sell this out at about $7 a share. I've spent some time looking at it, and it looks like the potential investment value of this might be closer to about $13. Now, I've shared with you in this screen, you can see that I have one of the source files for the investor's presentation from Atlas themselves. I don't usually like to pay attention to what Atlas or what any company's leadership says about their investments and stuff like that in companies, because usually there's a lot of blue sky involved with it. However, looking through this, I think that a conservative investment value of $13 a share is well within the ability of this particular stock. They're expecting it, and I think this is almost crazy, but they're expecting it to be up to that $41 per share by 2022. So we are 24 months away from that, basically, and if they can deliver on that, that'd be great. For me, I'm probably going to get to a point where I feel comfortable cashing out a certain portion of it and then keeping the rest for a residual return, kind of like what I've done with ChampionX, which that one was about 6 or 7 months ago, and now it's starting to make some moves, and who knows, but this one might be a similar type of return. But the reason why I do that is I like to have the asymmetric returns, but I also like to make sure that I preserve my initial capital. So when I'm doing these particular tender offers, when I do spin-offs, if I can figure out a way to make it so that I don't risk my initial investment, I think that I'm always going to turn out just fine, because if I can make sure that I have the return that goes on there, that romance side that Marie Schiller talks about, but the risk is gone because I've pulled my initial investment out, and I can put that into another tender offer, another spin-off, another whatever organizational change in a company, then that makes it so that I find that this was it's very lucrative for me. One final thing that I'd like to point out on this one, I did some digging, and I was trying to understand why would someone knock out the warrants, and the warrants look like they represent about 40% of the equity obligation prior to this transaction, which that gives you a lot of things to think about with this particular company, and understanding why they might want to knock out 40% of their warrant equity obligation. That could really put a lot of people saying, hey, let's jump in on this. And so I think this is a relatively safe position to hold for a little while. And more than that, once I cash out and I have just my residual return on this, then it'll be even better. It'll just be gravy on top of that. So that's some thoughts on the Atlas Technical Consultants. This one has been a learning experience with this one, with the warrant exchange. I've seen a couple of others like this, but this one was definitely a learning experience for me, which brings us on to our next one, which Shift Technology has a similar warrant exchange. Not exactly the same, but they're doing an exchange for 0.25 shares plus $1 per warrant for all of the outstanding warrants for Shift Technologies. Same type of thing. And at the exchange rate that we've observed with this, plus that $1 per warrant cash out, you're looking at basically 5 cents on the warrant equals about 20 cents per share. So at $3.25 a warrant, the share price, the implied share price of that warrant is $9 a share. The recent warrant trading, even post this announcement, has been about a 3 to 5% discount on the exchange rate. So full disclosure, I'm putting a significant portion of my investment into this. The warrants represent approximately 9% of the shareholder equity obligation, not nearly as good as the Atlas Technical Consultants. So this one may not be as safe as the Atlas Technical Consultants one, but it's still, I still think it offers a decent little upside, you know. And this goes back to that question: why would management knock out their warrant holders? Well, there's a lot of reasons why management might do this. It makes it easier for them to sell the company later on. They don't want to deal with the warrant holders. If you do some digging into it, the part of the warrant rate is if the share price rises above $18 a share, then that means that they're going to go ahead and they can call the warrants. So that gives you kind of an idea of what kind of value they're expecting out of this particular company. And then when they offer the cash on top of that, then in reality, your invested capital that's being risked is only about 66% at $3 a share, because basically you're putting the money in, you're getting the shares, but in reality, you're only investing 66% of it, and you've already got some of that payout that's happening right away. I will let you know, I'm a little skeptical about this one, partly because I'm an investor in cars.com, and that thing has not performed very well over the past few years. Carvana is another one that is in this market. You know, these online retailers of automobiles. Each and every one of those companies out there, it's kind of like the Wild West for this particular industry. This is a disruptive time for them. They all have business models that are attracting investors, and it's hard to pick the winner. You know, you figure out how to pick the winner, and you know, you don't have to make YouTube videos like I'm doing right now, nor do you have to worry about spending your time doing this type of research. So yeah, they all have these business models that are attracting investors. They're all doing these interesting things with their market. I don't know, you know, this might be something where I again leave a little bit on the table in order to see where it goes in 3 to 5 years, but I'm not. I want to do the exchange, get a decent return up front, and then put the residual in that. So anyway, one final thing with the full disclosure with this, you know, the the $1,000 portfolio, I'll probably do an update on it, because this is one of the positions that I put into this. I put the $1,000 portfolio into the PERS, and well, anyway, maybe I'll leave that for next week. We'll talk about how that portfolio is doing next week. So anyway, if you like this video, if you appreciate what I'm doing here, smash the like button. Go ahead and message me through the chat on YouTube as well. And as always, good luck with your investments. Take care, guys. As we finish up, we have one final note for you. This video was made for educational purposes only. Any companies mentioned in this presentation were discussed for educational purposes only. Discussing such companies and the specifics about them is for illustrative purposes only and not a solicitation to purchase them. We recommend that you conduct your own research and identify why you might want to own the company yourself before you commit any funds. We also recommend that you seek the services of a financial advisor that has considered your situation as your fiduciary. May your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks.